It's thinking. Why is it not going? Welcome to the weekly crypto check-in, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Robert Swarthout and Andres Sandate. Today, recorded on May the 20th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good to see you, Robert. Hope you've been good. I know it's been a couple of months since we recorded. We talk in between shows, but it's nice to be back on the air. And summer is upon us. Yesterday in Atlanta was pretty steamy, and it looks like it's going to be a hot weekend ahead.
Yeah. I mean, summer's certainly here, and humidity with it. And like you said, it's been 2 months. We not that we intentionally took a break. We kind of got tired of talking about the same news and didn't feel like much was newsworthy, and no sense in wasting anyone's time. So we, I guess, kind of what bumped me to wanting to do this recording now would be that the Clarity Act, kind of our first topic here. Finally, some progress, more so than just rumors. It advanced out of the banking committee. It was a long, drawn-out process. The banking, I guess, lobbyist and the regulators,
the crypto lobby,
everybody was in crypto lobby, yes, and it all revolved around stablecoin yield.
Correct.
In some ways, the most basic of all the topics we could be talking about. And finally, the bankers essentially won out at the end of the day. So kind of what allowed it to kind of get over the hump was if you hold stablecoin, a stablecoin issuer is not allowed to pay you yield effectively. They did write in some language, and I guess the compromise of sorts was that the issuers could pay a reward, put that in air quotes, a reward if you're using the stablecoin, but idly holding it in a wallet, not doing anything, is not going to get you anything. So at the end of the day, I'm glad that this finally did not hold it up any longer. I was slightly concerned that we were just going to end up with nothing this year because midterms are here, and things are going to be more important likely than news around the Clarity Act. So
in reading and trying to come up with an easy soundbite to encapsulate the compromise, it sounds like it's akin to a credit card, right? If you use the credit card, you can earn points, and those points can then be transferred into rewards, right? Miles can be converted, and or points can be converted into miles, I guess, is a simple example. So and what I liked about this is that we talked about this before we went live, that we had 2 senators cross the aisle, 2 Democrats to come over. So the bill went to the full Senate with a 15-9 vote. So you could say it was bipartisan. Now the question remains, is given just the midterms are looming, as you said, and there's a lot of really important issues going on in voters' minds right now. Is this something that can get done before let's say the August recess? I know that there's a July 4 target of trying to get something done before then and get it on President Trump's desk for a signature. Or does this slip and get bundled into something else? You talked about the amount of amendments, or the amount of pork that was stuffed into this bill to get it to where it is. It'll be interesting to see if it can get enough support in the Senate as it's written without major changes to go forward. I do think, though, it's a good signal to Wall Street and to financial institutions and investors globally that have been sort of waiting to see if the U.S. could get its get its act together around this. And I'm with you. I'm glad that this compromise around stable coins didn't drag out for months and ultimately kill all the momentum that we had going into the year. And Brian Armstrong from Coinbase's text, I thought, summed it up like, mark it up, let's go, and keep this thing moving.
It's I imagine those that were on the inside negotiating this were exhausted with it, because it was literally more than 2 months of negotiations back and forth. I don't necessarily know if it was daily, but I imagine at some point it just felt like it was never ending. So,
Yeah.
but yeah, at least on early part of May, so Kalshi, the odds website was
Oh, the
putting it at
prediction market. Yeah.
yeah, was putting it at a 60% chance that it gets passed this year. So we'll see. July 4th is here basically in a month. And it's especially with the holidays, it'll either happen quickly or we'll be holding our breath. So we'll see how it goes.
Yeah, definitely something we're going to be following in future shows now that we have something out of committee and goes to the full chamber. So
Mhm.
hopefully this this finally moment that we've been talking about for some time is
Yeah.
not a moment, but is actually the beginning of what we hope will be some very transformational change in the industry. But there's a lot of other things going on in
Yeah.
crypto that we can talk about. So let's move on.
Yeah. So oftentimes when I'm talking to just random people and they find out that I do this fund, they often are curious about the crypto, but they're more curious about AI right now. Everyone's more
Yeah,
curious about AI.
sure.
And I often kind of bring up in that conversation, I was like, there's a crossroads of crypto and AI. I didn't expect it to happen in May of this year, but it has happened, at least the beginnings of it. So kind of set the stage here. You have AI agents that are starting to do things for you, like go make a reservation or do whatever. Right now, they don't really do anything that they would have to pay to do, or you would have to pay to do. So you're not going to issue a credit card number to an AI agent. A, for security, but also B, just because they may be doing a task that technically would cost less than $1, and running a transaction on a credit card doesn't make sense for less than $1. So this is the perfect crossroads of crypto and AI. And that's the news here.
Yeah.
So AWS has launched with Coinbase and Stripe, kind of helping them along, allowing agents to autonomously buy data, APIs, content, and do transactions with crypto. This was I assumed it would happen, but I was almost certain it was going to happen thing. And it's really cool. So, like an example we were talking about before we started recording that I think kind of helps illustrate it is right now, you might let an AI agent help you plan a trip, plan a vacation, right? I'm going to go here, I'm going to do these things. It kind of helps curate data, but it doesn't really book anything. So, in the world where they can use crypto or some payment mechanism, you can say, hey, yes, I do like this. Go book it for me. So it's going to go book the airfare. It's going to go book the hotel or whatever it may be. So I would have, I don't know if I'm going to put a date on this necessarily, but if it wouldn't surprise me if in the next year you had AI agents that can basically replace a travel agent full stop. Um, and that's just one of probably millions of examples of what they be able to do long term. So
Yeah, I mean, without getting into the more technical and I guess engineering and programming aspects of this, which is definitely more your field, it feels like an environment could be nearby where yes, like you have this relationship with an agent that is doing all these things in your in your life. Like you brought up travel as a really good
mhm,
example, right? When you're going um, on a week-long trip, right? And you've got to get reservations and car rentals, and things
mhm,
change mid-course.
right.
Anybody that's done, any type of trip like that, you can imagine like the benefit of being able to, text and get a response and can get a confirmation. We
Mhm,
take for granted now that we can book a reservation to go to a restaurant, right? And all that sort of set up when we get there,
mhm,
and it's a big occasion, right? So the nature of being able to take it a step further and empower these agents to do, you know, um, to handle the billing, the payment, the
mhm,
settlement, all of that. I mean, the technology is clearly there. It's interesting on the back end of all this. Like, there's clearly companies that are going to win,
mhm,
and those that are going to be, I guess, the blockchains where a lot of this type of activity happens. And I think that speaks to the commercial use case and the
mhm.
utility around these blockchains that we've been talking about for some
Years.
time. But it's but yeah, it's neat. I think that the average person um, is still trying to wrap their head around, is AI going to be a good thing
Mhm,
net, or is AI going to take jobs, this is graduation season, right? A lot of
Yeah.
young people going out into the economy, into the quote unquote real world. And I'm starting to see and read and just hear more and more about this backlash that's growing around data centers and around AI,
Hmm.
and just the impact. And I think there's this fear, right? There's a viral speech from Eric Schmidt, the former CEO of Google, that was booed when he talked about how AI was going to transform our economy and have an impact on everybody. And I think he was probably being pretty honest.
Yes.
But I think he was also, probably getting some of that feedback from the
Mm-hmm.
graduates who are like, I don't know if this is a good thing. And I think anytime you have some big transformational moment, right,
Mm-hmm.
like in our economy, and especially when it impacts jobs and people's futures, there's this fear, uncertainty, and doubt, right? So
Mm-hmm.
there's so much to work out. I think it's cool that we can come on the show and just talk about, at least from a crypto perspective,
Mm-hmm.
how this technology with crypto can actually hopefully make things easier and more efficient. You hate to think it's taking jobs away from, say, a travel agent, for example, but
Sure.
hopefully it's finding ways to do things more efficiently. And what that translates into, hopefully, is people getting more time back. Some of the hassle factor goes away. Some of
Yep.
the things that are more obsolete become a thing of the past. So we'll see. But it is cool from a crypto standpoint. Like we've always talked about, what's that killer app,
Mm-hmm.
for crypto, and we're starting to see things, play out with this convergence of AI.
Yeah. And I guess a little bit we can tie the first topic with the second topic here is this will likely be done largely with stablecoins going forward.
Right.
So you might
Right.
actually get some rewards, aka credit card rewards points, when your AI agent's booking your travel or whatever it may be. So
Yeah.
yeah. Moving on here. So part of part of having a fund, you're looking for signals, good and bad, right?
Yeah.
When Wall Street starts to hire for crypto positions, I generally get a little bit excited because it's like they tend to be ahead of the curve, or they know where it's going. So when I saw a bunch of job postings come up about crypto, this was right after or right at the cusp of the Clarity Act getting out of the Senate Banking Committee. I was like, okay, we are making progress here. They're not going to go spend hundreds of thousands of dollars per position for the fun of it. So this is, a lot of times it's a research position or it's engineering because they're trying to integrate it in. So it's a wide ranging amount of positions. So I guess fun progress there. So
Yeah, and it's major firms, right? It's the JP Morgans. At certain point, like, Jamie Dimon was
yeah,
very vocal about his stance on crypto,
anti, yeah,
and
yeah,
was, yeah, and now you're seeing these firms, not only launching products, but also, you know, again, hiring for what are now going to be business lines effectively,
mhm,
right? These are
right,
business lines, and they're going to be part of the earnings call. Uh, how is your retail business doing? How is your commercial lending business doing? How is
mhm,
your asset management business doing? How's your investment banking business doing? And oh, how's your crypto business doing? Right. So these are
mhm,
business lines. They're going to have to create profit, and they're going to be bringing people in. What I think the candidates for these positions are going to have to be able to do is they're going to have to be able to navigate a crypto and a traditional finance environment. From everything I've read, and looked around these headlines, the jobs are going to be going to people who have the ability to operate in both worlds. You can't be, the crypto native, with a vision or an operating environment, or operate in an environment where crypto is going to take over and eat everything. We just saw the impact of the bill,
right,
of an environment where, just because you could do it one way with respect to stablecoin yield, doesn't
mhm,
mean you're going to get that done. And
right,
the bank lobby and the bank stakeholder is still very, very important
mhm,
to the U.S. economy, and obviously to the future of politicians' lives, right? Their ability to get reelected. So there's so much that has to, probably, the candidates that are going to be able to land these positions, I think they have to be able to navigate in both worlds. And what
mhm,
to me is fascinating is, you know, uh, when you think about where crypto has come over 20 years, it's fascinating that for so long the banks were not hiring for these positions.
Right.
And now in a matter of like literally, it feels like it's a year, right? Or maybe
Probably.
6 months.
Yeah.
It's like now that's where the jobs are. If you look at the crypto companies, I mean, they have not been hiring in the last 6, 12 months, right?
Right.
So it's like funny how now a lot of these folks
Mhm.
that probably were going to go crypto and stay
Yeah.
in crypto are now going to end up finding themselves looking at jobs on Wall Street.
Yeah. In many ways, people that are outside of the engineering positions, any of them, they're like, say, senior director, those kind of things. Like, they're like this weird world of bilingual when it comes to technology and traditional finance. So they're going to have
Yeah.
to be able to talk both ways, and kind of bring those groups of people together to be successful. So
Yeah. Yeah. They're doing,
certainly a
yeah.
relatively limited amount of people that have that kind of skill set right now. So
Yeah. I think we're two of them, but
yeah,
there's others. But yeah, you're going to have this domain overlap. You're going to have to be able
yeah.
to talk tokenization, but also understand what are
Mhm.
we tokenizing, right? You're going to have to be able to understand the, to some extent, the technology and the blockchain and the, what's going on behind
Mhm.
and underneath, if you will, but you're also going to be able to have to translate it into a language where you're sitting in a management meeting or you're sitting in front of a prospective client or customer and relate it in terms where they're not a crypto native
Yep.
person, but they're making a buying decision, they're making a purchase decision.
Mhm.
And so, yeah, I think this whole domain overlap concept really resonates with me because we've I've been relatively new in crypto. It's
Mhm.
only 3 years, but some people have been in it only 3 or 4 months, and some
Right.
people are just getting into it. So yeah,
Mm.
pretty fascinating.
Yeah. Well, move on to our fourth topic, and it literally might be one of the things that these positions are working on when they start is so tokenization of real world assets. More so, what we're talking about here is the amount of assets that are tokenized is
Hmm.
crossed the $30 billion mark. That's a lot at this, and in the same breath, it's nothing, right? But most of this is roughly, I guess, 50% of this 30 billion is made up of U.S. Treasuries that have been tokenized, and you know, I thought this was going to be a theme this year, tokenization, and I think that it still will happen at a much bigger scale. But what caught my attention on this particular graph was it went from being a rather I guess calm curve up into the right to starting to be a little bit more exponential.
Yeah.
So we're about to hit that stage, and again, it's probably the Clarity Act that will allow this to happen because more people feel safe to be in the market, innovators, the banks, and all of a sudden we're going to wake up and 30 billion is going to seem like a daily number, not an all-time number. So
Right. Yeah. The growth of 5x in 18 months is kind of the subtle headline below the headline, right? I think so many
yes.
people, I said this to you before we got on. I mean, I feel like tokenization is going to be like what securitization was to the sort of mainstream
Hmm.
person in finance, the mainstream person in the economy. I mean, obviously securitization was a very bad thing coming out of 2008, right?
Yeah.
Because it was a bad thing in the eyes of maybe more Main Street because of of how it was maybe taken too far in a way. And yeah,
Hmm.
securitization has not died. Securitization is still very much alive and well. And I feel like tokenization is going to be similar, right? It will be something that is very much probably there's going to be some good things that come out of it. There's going to be some things that we're like, we didn't need to tokenize that.
Hmm.
But nevertheless, I think that you had said this early in 26, this was going to be one of your big kind of themes to focus on. And I think now we're talking about when you talk about money market funds and treasuries, those are not speculative assets that we're tokenizing, and those are fundamental institutional
Hmm.
assets that are the oil of the engine of the economy globally,
Yeah.
certainly in the U.S. anyway. And yeah, I mean, I think one of the cool things is the wallets that are going to get created and are being created for tokenization. My little world of financial services and asset management, I think, is just one of many sectors that are really ripe for tokenization to play a bigger role. And I know we have a headline, coming up with the DTCC
Mm.
pilot, right, which kind of speaks to some of the real world activity that's happening. So it's neat. I mean, just being in the asset management space to watch how this is going to really transform, and hopefully will bring, liquidity, more liquidity to markets, where it's needed and wanted. So pretty cool.
Yep. And kind of along similar lines, and kind of a bit of a theme running through the middle of these topics here. But our next topic is the first cross-border settlement of tokenized U.S. Treasuries. Okay, that's a mouthful. So the first thing that caught my attention was the bank that was attached to this from the beginning was J.P. Morgan. Again, you alluded to it a minute ago. A year and a half ago, or prior to the Trump administration, really, Jamie Dimon was extremely anti-crypto, and he claimed that he would fire anyone that would touch it. Now they are in the middle of it, and you can be assured that they got their eyes set on how they're going to make money in this. So what happened here was Ripple, JP Morgan, and MasterCard, in a small startup called Ondo, basically tokenized US Treasuries and settled them across the blockchain, and sent US dollars into Ripple's Singapore bank account.
Yeah.
This was effectively done in less than a minute, and this could have been done in off hours.
It was under 5 seconds.
Yeah,
Yeah,
on the XRP
so-
ledger portion. So
Yeah.
it's it is settled outside of traditional banking hours. That's, I think,
Right.
the most important part of the headline there.
Right. Right. Yeah.
So
Really cool. I mean, the milestones are starting to grow, right? I think the thing I'm reading is that tokenized U.S. Treasuries crossed 10 billion on February 26th and stood at a little over, close to 13 billion as of early April. So, up significantly over the last, year and a half. I think you said this earlier in the show, Robert. I mean, we are looking at these numbers, and they seem like big numbers in the grand scheme of things. When you talk about, global payments and cross-border settlements, this is like a pittance. This is a fraction of what happens on a daily basis. And I think we can easily take for granted that these seem like really big numbers, but when you zoom way out and look at what's happening, the naysayers would maybe be critical and say, it's
Right.
not that much. But yeah, anybody that's studied any type of exponential growth, like we underestimate, what people are capable of, and and then
Short term.
overestimate, right? Yeah.
Mm.
And so I think this is one of those examples. I think we'll look up in 6 to 12, maybe 24 months, and just be blown away by how much activity is happening here in just this one use case. Like, this is just cross-border payments,
Right. Yeah, and e- everything's currently measured in billions right now. When we start talking about trillions, we know that it has moved to its next stage.
Yeah.
Some of these markets will be measured in trillions per day. Some are per month or per year, but everything's in billions right now, and in some cases even millions. So we got to walk before we can run. But we are starting to get the motion. I guess the ship in motion here. So
Yeah, no doubt about it.
yep.
This next one's always fun. We got to catch up with
Yeah.
our friends over at MicroStrategy, or I guess now called Strategy. Let's
Yes.
talk about what's next in Michael Saylor's
Yeah.
journey with Bitcoin.
Yeah. He for the longest time he was a hodler, and for those that don't know or don't remember, hodl, HODL, is a meme within crypto, because somebody spelled hold wrong once upon a time. And basically it means you hold it with your diamond hands and you never sell, and you wait for it to go to the moon, right? All the memes there. And I guess as part of his evangelism for his strategy, literally, of holding Bitcoin, he said he was never going to sell Bitcoin, and he's had some crazy predictions for prices.
Yeah.
Well, I think reality is set in, and the Bitcoin that they hold is worth, on average 75,000 a piece. We sit at 77,000 change, so they're slightly above water. But they also have this massive dividend they have to pay, because they've had this different share class that they've issued. And I think that instead of always reissuing new equity to pay old investors, they've kind of wised up a little bit. So, I wasn't thrilled that they had to do this, but I was thrilled that they're coming to their senses, and they potentially won't turn into a too big to fail company within crypto? Because that was a concern for a while.
Yeah, I had brought that up. I mean,
Yeah.
I've said that to several people in my circle. Is just
Yeah.
what happens to this company if they get to the point where they own 2 million Bitcoin
Yeah.
and there's an infinite number of people that want to own strategy,
Right.
and they're just along for the ride. And yeah, and so who knows? I mean, maybe I'll be proven wrong. I mean, the goal is not for this whole industry to collapse on, one company going down. But yeah, I mean, what's interesting is you look at the numbers. So they own about 818,000 Bitcoin at an average price of around 75,000 a Bitcoin, and price for Bitcoin today is just over 75. It's gone back and forth in recent days between 77 and 80, right?
Yep.
And it's up in recent months, right? I mean, the
Yeah.
start of the year, it's up, right? So what's fascinating is the, I guess you talked about this earlier, running a fund, right? You're looking at signals, and talking to somebody at an institutional crypto asset management firm last week, their Bitcoin maxis, and they talked about their view of Bitcoin, and they said, you look at it from our perspective and you see all these different crypto strategies and you see all this opportunity to invest in this space, and they still believe the number one strategy is owning a significant amount of Bitcoin, and they believe from here at the 75 $80,000 level it still could go 5x, and so they're long term bullish, and they spend all day every day looking at all these investment strategies. But they also recognize you have to be diversified, and so it is yeah, it's going to be fascinating to see how people diversify their crypto exposure over time, because there's still a lot of people, when you talk about crypto, they still associate it with just Bitcoin. We've
Yep.
spent the last 20 minutes talking about all these other things going on in crypto outside of just Bitcoin,
Yep.
but it still very much is the 800-pound gorilla. And I'm going to be fascinated to see how people's exposure to the space grows and evolves over time. And does it grow beyond Bitcoin in the near term, or does it take us 5 years for people to start to look at other tokens and look at commercial utility, or start to look at other strategies? And how fast does that happen, I guess, is one big question. And number two is, as that shift happens, how do they express their view as an investor and get exposure to these other parts of the economy, the crypto economy, the digital asset economy? There's a lot of different angles. We could spend the remainder of the show talking about, you know, Sailor, and talking about, Bitcoin, which I don't think either of us want to do. But yeah, it's fascinating, because the good old fashioned debt holders and the good old fashioned like investors that are owed this dividend, TradFi people, right?
Right.
And they've got rights, right? So I think he's realized, hey, I got to pay these dividends, and I can't keep raising more capital. So yeah, it's gonna be fun to watch, how this plays out, and hopefully for crypto's sake and the asset class's sake, like it doesn't lead to some bailout, which wouldn't I don't think would be a good signal.
Correct. Absolutely. So our next topic is the DTCC is going to be pilot testing tokenized securities trading in July, with a full launch set for October. If it happens by October or around October, I will be shocked, but I will be thrilled at
Yeah.
the same time. The DTCC is massive.
114 trillion.
Yes, of assets under, I guess, what do you call it? I guess
Custodied assets,
custody. Yeah,
effectively. Yeah, kind of report through their technology, the backbone. Yeah.
yeah. I mean, literally the backbone of the equities market.
Yeah.
So it's cool stuff. I mean, like, I don't think we have tons to say here. I mean, there's 50 firms as part of the 50 big name firms too, as part of the initial trial. And I imagine they've already been doing testing behind the scenes too. But it's BlackRock, JP Morgan, Goldman Sachs, NASDAQ, and then you have some crypto companies, Circle, onto Ripple Prime, which is part of Ripple, and many more. So pretty cool stuff.
Yeah, I mean, and when you go underneath and sort of dig in, I mean, a lot of the, a lot of the big stuff, right? When you talk about um, owning stocks, right? You get voting rights, you get dividends. We take for granted all those rights we get as an owner in a company. A slice of
Hmm.
a company, a share of a U.S. company gives you rights, right? And
Right.
and so all those things are going to transfer to, um, you know, are going to transfer, the same bankruptcy protections, the same voting rights, the same dividends. You get your proxy in the mail. I mean, all that stuff
Hmm.
is going to transfer, um, to this, tokenized trading approach on the DTCC that you once had with book entry. And I think it's going to be like almost like you go back to the year 2000 when there was all this fear around what's going to happen, and is
Hmm.
our computers going to go haywire? And I remember that. I mean,
Yeah.
I remember that transition, and it's sort of like it turned to 1/1/2000, and then nothing happened.
Yeah.
And I mean, we just make a huge deal out of this stuff, and this is another example of like maybe it'll be an awful disaster, but
Hmm.
I'm willing to go onto prediction markets and say there's probably a good chance that it's going to go fine, because they're spending so much time testing it and
Hmm.
making sure. So we'll see. I mean, if there's no event in our I guess our update on this in 6 months, I mean, it means it's going
Hmm.
great. And
Right.
another
Absolutely.
example of like that this stuff works.
Hmm. Yep. So our last topic, and this just shows progress. I mean, there's nothing terribly meaty here on this topic, but Schwab, the big retail brokerage, um, basically turned on direct Bitcoin and Ethereum trading to their 35 million clients, which total assets is 12 trillion. It's a big deal. I haven't seen volume numbers on this, and this admittedly took this news was back in April, but like it's interesting. Is like it's not that they're trying to do ETF wrappers. It's the direct asset. So they
Yeah.
are competitive, I guess, with Coinbase in some sense. I imagine the fees are less than Coinbase would be on Bitcoin or Ethereum. Um, but I don't know the plumbing behind the scenes. Maybe they're using Coinbase to kind of route the trading too. So
Yeah, like you said, they're going to be going head to head with Fidelity, Coinbase, Robinhood.
mhm.
You know, what I thought was interesting, according to Charles Schwab, that their clients, you mentioned 35 million of them,
Mhm.
and what's nuts of that 12 trillion in client assets, and of course that's RIA assets. We're an RIA, we have assets at Schwab, so
Yeah.
our underlying households have assets custody at Schwab. They're part of that 12 trillion. What's fascinating is that 20% of spot crypto uh, uh, exchange traded products are held
Mhm.
by Schwab clients. So
Oh
one in
wow.
five, according to Charles Schwab, one in five of spot crypto exchange traded products are held by Schwab clients. So they have a pretty big role in
Yeah.
in retail crypto when
Mm.
you step back and you look at some of these numbers, and they're going to be charging 0.75%. So
Okay.
75 basis points, one 0.75% per trade. By comparison, Fidelity charges 1%. So
Hmm.
that
Cheaper.
might be an incentive for people to do some trading with Schwab. Robinhood charges between 3 basis points
Mhm.
and 95 basis points. So what that means in,
The
in English,
whole spectrum.
right?
Yeah.
So if you have a whole bunch of money at Robinhood, you're getting charged 3 basis points. If you
Mhm.
have very little money with Robinhood, like I have a Robinhood account, not a lot of money there, just kind of more novel.
Yeah.
But I'm probably paying 95 basis points, and then Coinbase's fees can be as high as 4% for retail.
Yes. Yeah.
So, one thing we're going to see is I think we're going to see fee pressure
Mhm.
around trading, and people are going to move money if they are trading, especially if they're high volume traders, um, over time. But I think, yeah, to your point, like I think the word you said sums up this whole episode, which is signal. There's a lot of signal in a lot of these headlines. And obviously the biggest one being the Clarity Act moving out of committee onto the I guess, onto the full chamber floor for discussion.
Mhm.
The hiring in Wall Street, major signal. Those are real jobs, $200,000, $300,000 salaries. Those are real investments in the business. And then I'd say just the last one is good old fashioned stockholder rights, bondholder rights when it comes to strategy. They have
Mhm.
rights, and so the CEO Saylor and the management team are now sort of facing that. Are we just going to keep raising more money? How would that be received in this type of market environment? Or are we just going to go ahead and sell some Bitcoin and make a dividend payment, which it looks like they're going to do. So
Yeah.
pretty fascinating.
Yep. 100%. Well, that's a wrap for this episode of the weekly crypto check-in. Keep updated with the latest crypto insights by searching for Teton Crypto Capital or the weekly crypto check-in on your favorite podcast platform. Leave us a review if you like what we're saying, or find our LinkedIn page and give us a like. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.